Okay, welcome everyone. We're going to get right into the stock market technical analysis. I want to cover today the general markets. We got large cap tech earnings coming up this week. We also have a Fed meeting and they're going to report on Wednesday. So lots of potential price movement to take place this week. And with these big FANG stocks reporting, and how heavily they're weighted in the S&P 500 as well as the obviously the triple Qs, which is the tech sector. Potential a lot of movement to happen here. So I want to cover those, and then I also want to look at some commodities. Haven't covered those for a while, so I want to look at those. Couple interesting setups there, and we'll look at some individual trade ideas, things that look interesting, and we'll wrap up. Okay, so we'll start off with triple Qs because tech's reporting this week. Now, I'm not going to go through this too much detail because there's not a whole lot of change. Right now, we're back testing this trend line. So you can see here, if I go to the hourly chart, we had a bearish rising wedge pattern on the hourly chart right here. You can see all the times we tagged support, 4 different tags, 1, 2, 3, 4, 5 tags, sorry. And then we broke. Here we had a tag from below, and then they ramped it up, and we're basically back testing, this area right here. So we are at major, we're at resistance or near. We could pop up and hit that trend line, but we're at resistance. We have on the daily chart big negative divergences that have been building for some while. So continued negative divergences. This is a divergent high, meaning we have a new high in price up here with a lower high in momentum there and there. These momentum are lower than the previous highs. Okay, so divergence in the momentum indicators at resistance right before earnings. So that's a setup. That's basically how it's set up. It's set up bearish going into earnings. Lots can happen during earnings. They could gap it up after earnings, and then as soon as the market opens after they report, sell it down. We have to, it's not so much what happens right after they report, but really what the market decides to do with that once they're able to trade it. So we got to watch that on earnings. And the S&P 500, really the same thing. We have a new high in the S&P 500 here, lower high in momentum. Again, we have negative divergences that are building. So new higher high in price, lower high in momentum. Resistance right now is up here on this trend line, way up here at 445. And it's an all-time high. So there's really just that trend line. There's no other trend lines above to act as resistance. So lots can play out. But again, earnings in the Fed this week. So we'll watch that. It's really all I have on the SPY. If we sell down, we're going to look, we'll watch some of these downside targets. On the hourly chart, we've got some gaps to fill. There's a gap right here on the SPY sitting at about 435.60. And we break below that, we could head a lot lower. We might be set up for a correction coming. So I don't expect the Fed to do anything. They're likely just going to continue to say that inflation's transitory and they're going to wait and see and they're going to keep rates where they're at. They're likely not going to do anything. I think the Fed chairman Powell is, his term's ending relatively soon, and I think that they typically nominate a new Fed chair coming into the fall. So he's likely just going to hang tough until his term's up. Okay, so some of these FANG stocks, Apple reports tomorrow after the bell. As of right now, we have a breakout, a backtest, and a continued breakout. So bullish price action because you can see here's the former high on Apple, 144.45. We broke above that former high, came in, backtested it, and we're breaking, we're holding above there. So bullish price action. Momentum has negative divergence, telling me that we're likely going to fail this breakout. That's the probability. Doesn't mean we have to, but if we sell down after earnings, we get some sort of a big breakdown, look for the former high to be support, sitting at about 144.45, and you break below that, and I think we're heading a lot lower. So things to watch. If we don't break below that former support and they rally it in, after earnings, then, we're going to continue to see higher highs in price. And Amazon has pretty much a similar chart. Negative divergence, we had a breakout, a backtest, and we're holding above. So bullish price action and negative divergence. So again, earnings coming out on the 29th after the bell. Google earnings coming out tomorrow after the bell. We have this upward price channel right here, and we're breaking out above that price channel right before earnings. And we have negative divergence that remains intact. So negative momentum breaking out to the upside right before earnings. To me, this looks very suspicious to see a breakout like that happening right before earnings with negative divergence. Doesn't bode well for the setup, but again, it's still a breakout until it's proven to not be. What I would look for is a break back below this range to signal that this was a false breakout. Right now, that's about 2,685, 2,686. We break back below into this range, and we're likely heading all the way down to the bottom of the range, way down here. So things to watch on that one. Microsoft had a daily trend line here. We broke, had a sell signal right there. Back test, and we're sitting right on trend line. We're right at the trend line. So earnings coming out tomorrow after the bell. Negative divergence. Everything's set up to sell down after the earnings. Although we might see it pop right after the earnings, but I think it's likely going to get sold into. So we'll watch for that. And if you start to see that, then that's going to indicate that the near-term top in these tech stocks are in, most likely, and we're going to have a correction. Okay, let's look at some of these commodities. I want to start off with copper. This is CPER. It is a copper ETF and basically allows you to trade copper without having to do the futures. You can see here we had a clear uptrend in copper coming off the March 2020 lows, and we put in a divergent high, and that was telling us we were likely going to reverse trend. Here's your negative divergence in the PPO, and here's your negative divergence in the RSI. Now recently, you can see what they've been doing is we had a sell signal or a break of trend, and then they're coming in for a back test. So it's gapping up today. Now, it's not fully at that trend line. We could go a little bit higher, but any tag of that trend line up in this area would actually be a back test of the broken trend line support that should prove to be resistance with the negative divergence intact. So I would be looking for, that would be an objective area to establish or add to a short position in CPER. A proxy of this is a copper mining stock, Freeport-McMoRan. And right now we got resistance sitting at about 37.80. We also have a gap up here, all the way up here at 39.23. So I would look at rallies into these resistance levels as areas to potentially add or establish a short position. Of course, this is just my opinion. Everything on this channel is just my opinion. But with copper rallying into major resistance, I would expect that these will, this one will start to get rejected up in these resistance levels as well. Negative divergence has, been remained. We have a sell signal. This was your sell signal. So again, I think we're downtrending in FCX. And next level of support on this is about 30.22. I don't think, we should get a bounce off that level. If we break below that, then I've got some good support down here at 23.82, and then potentially support all the way down here at 17.50. That would be a final target if when it got down there. That's pretty far down there. But definitely I'd look for this 30.25 area, as a potential level of support. Coffee. So I missed this trade. It just didn't get down to my buy zone. So I had a buy zone on Joe right down here in the 40.70 down to 39.86. We got close. We dipped down there, got close, but the buyer stepped in. And now the thing's just gone parabolic. So at this point, if you're long it, congratulations. That's a great trade to the upside. I think there was some news that was announced on this where there was some bad weather or something. But no end in sight right now. I don't see any negative divergences intact. So in general, this just looks like a breakout. I do think we'll probably get a pullback. Look at these gaps to fill. maybe we get a pullback into these gaps. Those, as far as I can tell, would be the next areas to buy because I don't have any negative divergences on Joe. So as far as I can tell, we're just continuing what looks like a bull trend with a pretty impulsive breakout. Pullbacks should come, and those will be buying opportunities. So one area that I'm looking at is for the next potential breakout would be sugar or cane, C-A-N-E. Looking at the weekly chart on cane, as I roll back, you can see going back to 2012, we've got, let me get rid of that. We've got a downtrend line. So a lot of these commodities have been in a bear market, but they all look like they're starting to break and start a new bull market. Cane, there's your downtrend line on the weekly chart. And we are just there at resistance. We're actually breaking above that so far this week. The week's not over, so it's not a confirmed breakout, but we're above it right now. We had bullish divergence starting to show up really down here. Is where on the weekly chart you started to get some bullish divergence. And looks to me like we're possibly going to break higher or get that breakout move. Here's your daily chart. You can see it's just starting to break. It's not super impulsive yet, so I'd like to see more impulsive breakout action, but we're above that right now. So I'd be looking for the potential there for this thing to break out. We have, here's your bullish divergence on the daily. You can see right there on the RSI and right there on the PPO. See how price was moving lower? That's a divergent low. That's a divergent low. And then you started the new bull trend, which I think is likely going to continue. We're just about to potentially break that long-term downtrend and start a new, kind of confirm a new bull trend. So that's cane. Again, no bullish breakout or buy signal yet, but I think we're very close to that. So we'll get through this week. Likely the Fed is probably going to trigger trigger this one. Again, I don't think the Fed is going to do anything, so they're likely going to just continue pumping the market, keeping rates low, and that could be the signal for these commodities to, start to break out. Let's look at gold miners. Gold, again, just treading water sideways. You look at the hourly chart here. We've gone nowhere really since July 6th. So almost a month, not quite a month, but a month of just sideways chop. But holding above support at 1790. So again, if you look at the weekly chart, the last bull market topped out right here back in 2011 at $1,920. That was kind of the overshoot, and then it basically broke down, and we tested this 1790 as resistance 3 times, once, twice, 3 times, and then it went into a bear market. So again, as I zoom into more current time frame, you can see we had a breakout above that 1790. That's a confirmed breakout. 3 strong weeks of bullish buying. We then corrected that, wipe out anybody who took that last minute breakout. And then, because again, the time to be buying gold was really down in this area, down here at 1200. You can add to it on support. That's the areas to basically go long a bullish trend. But when you get these parabolic moves, that's usually going to get corrected. So you can see here 1790 though, we're right there at support. We've been holding that all for the last month. So I think it's likely we're going to, I'm looking for the next leg higher in gold. The Fed's likely going to trigger what looks like the commodities are starting to do, but it looks like maybe there's the next wave higher in the inflation trade. I don't see any signs that this inflation trade is over. Starbucks, so again, we're just kind of trading back in the same range as Friday. I talked about how I thought it was likely going to just trade up in this area for a couple days. Earnings comes out tomorrow, and so, they'll probably report a good earnings, but I think their guidance, they might guide weak. Given the nature that coffee has expanded, the price of coffee has really exploded to the upside quite a bit. That's going to drag on their bottom line, so the setup for this is bearish. You can see here, you have this bullish trend coming off the March 2020 lows. You have negative divergence. See the negative divergence, how we're just losing momentum. Looking at the RSI, you can see we're starting to turn down here. and confirm that negative divergence. And the PPO hasn't quite turned down yet. So we'll see how that plays out. But they've recently rallied it right into this broken trend line. See the trend line, how it's broken? We broke the trend line. There's your sell signal, back test, and then another back test, and they've recovered it, but right before earnings. So I think it's likely earnings is going to smash this thing back down. And that's kind of what I have on that one. So that looks like a bearish setup, although we do need to see how that trades after earnings. Okay, that's really all I have for right now. Lots of movement to take place this week, so we'll just stay tuned. We'll keep an eye on the charts, letting everyone know what I'm seeing. If you guys are new and you find value in the content, hit that thumbs up button. I do appreciate that. And I will catch you guys on the next video.